Welcome. Today we journey into the world of depository systems in India, specifically NSDL and CDSL. Depository systems, much like banks for your money, are safekeepers for your securities. They hold your shares, bonds, mutual funds, and other financial assets in an electronic form, making it easier to manage and track them. In India, we have two depositories, the National Securities Depository Limited or NSDL and the Central Depository Services Limited or CDSL. These are the pillars supporting the Indian securities market, each playing a pivotal role in ensuring a smooth, transparent, and efficient system for investors. Let's start with the NSDL. Established in the mid-90s, it is the first and largest depository in India. NSDL's formation marked a significant shift from physical to electronic securities, revolutionizing the Indian capital market. It aims to ensure the safety and integrity of India's financial market by providing reliable, convenient, and efficient depository services. On the other hand, we have the CDSL, the second depository of India, which came into existence a few years after NSDL. CDSL offers similar services to NSDL but with its unique approach and initiatives. It has made significant strides in promoting the dematerialization of securities, especially among individual investors, and has contributed significantly to the growth of the Indian financial market. Both NSDL and CDSL function under the regulation of the Securities and Exchange Board of India, or SEBI. They work with various market participants, including stockbrokers, custodians, issuers, and registrar and transfer agents, facilitating seamless transactions and ensuring the secure and efficient transfer of securities. While they may appear similar on the surface, NSDL and CDSL have distinctive characteristics and functions that set them apart. They cater to different segments of the market, have unique operational strategies, and offer varied services. With this understanding of NSDL and CDSL, we can now delve into the differences between these two systems. Let's unpack the details in our next segment. While both NSDL and CDSL serve similar functions, they differ in their incorporation and ownership. Pivoting our attention to the incorporation of these institutions, let's start with NSDL. The National Securities Depository Limited, or NSDL, was established in the year 1996. It was India's first depository, marking a significant shift in the Indian capital market. The principal promoters of NSDL are the Industrial Development Bank of India, Unit Trust of India, and the National Stock Exchange. These key institutions not only own but also manage NSDL, shaping its operations and strategic decisions. On the other hand, Central Depository Services Limited, popularly known as CDSL, was incorporated a little later in 1999. The Bombay Stock Exchange, along with a consortium of leading Indian banks such as State Bank of India, and Bank of Baroda, played a crucial role in its founding. CDSL therefore operates under the ownership and management of these institutions. It's important to note that while both NSDL and CDSL are registered with the Securities and Exchange Board of India, their ownership structures differ significantly. NSDL is primarily owned by financial institutions, while CDSL's ownership is more diversified, including a blend of stock exchanges and banks. This diversity in ownership also influences the management styles of the two depositories. NSDL's management is primarily driven by financial institutions, focusing on providing efficient depository services, while CDSL's management, influenced by its diverse ownership, tends to focus on a broader range of services, including investor education and awareness. In conclusion, while both depositories play a critical role in the Indian capital market, their origins, ownership structures, and management styles set them apart. The differences in their incorporation and ownership reflect their unique identities and strategic focuses. Thus, the key difference in this aspect lies in the ownership and management of NSDL and CDSL. The services offered by NSDL and CDSL, though similar, have slight variations. Diving into the world of depository services, both NSDL and CDSL offer a plethora of features to their users. Both entities provide electronic storage and handling of securities, ensuring a smooth transaction process for investors across the country. Starting with NSDL, it provides services like dematerialization, where physical securities are converted into electronic form. It also offers rematerialization, which is the reverse process, allowing for flexibility in handling securities. Additionally, NSDL facilitates settlement of trades in both the stock and debt markets and even provides services for holding mutual fund units. On the other hand, CDSL, while offering similar services, has a few unique offerings up its sleeve. It has introduced services like Easy, an internet-based facility for investors to access their demat account online, and Easiest, which allows demat account holders to execute trades over the internet. Moreover, CDSL provides Spice, a facility for corporates to manage their securities online. Both NSDL and CDSL have played pivotal roles in the Indian financial landscape by offering facilities that ensure the safety and convenience of handling securities. They have made the process of trading, holding, and managing securities a breeze for investors, thereby contributing significantly to the growth of the Indian capital market. Therefore, while both offer essential depository services, there are some unique offerings that set them apart. The reach and network of these depositories also mark a point of difference. Let's first look at NSDL, the National Securities Depository Limited. With its headquarters in Mumbai, NSDL has spread its wings far and wide across the country, boasting over 200 branches. Its presence isn't just limited to the metropolitan cities, but extends to the smaller towns as well, ensuring that the services are accessible to investors from all walks of life. NSDL's extensive network is a testament to its commitment to inclusivity and wide-ranging service delivery. Now shifting our focus to CDSL, the Central Depository Services Limited. Although younger than NSDL, it has managed to establish a robust network. With its headquarters also in Mumbai, CDSL has over 150 branches spread across the country. Its reach, similar to NSDL, extends beyond the bustling cities and into the smaller towns, facilitating the participation of a diverse group of investors. Both NSDL and CDSL understand the importance of a broad network and strive to expand their reach to cater to the varied needs of investors across the nation. However, as we can see, NSDL has a slightly wider network, which can be attributed to its earlier establishment and longer operational years. Hence, the network and reach of NSDL and CDSL differ significantly, influencing their market presence. Market share is another area where NSDL and CDSL differ. When it comes to the slice of the pie they each command, NSDL has traditionally been the larger player. With a substantial number of depository participants spread across the country, NSDL has managed to capture a significant part of the market. However, CDSL is not far behind. It's been steadily increasing its market share thanks to its impressive portfolio of services and a growing network. These two entities are continually competing, trying to outdo each other, and this competition fuels their growth. The market share each holds is not just a number. It is a reflection of their reach, the quality of their services, and their ownership structure. The larger the share, the wider the reach, and the more extensive the services. This difference in market share is a result of their varied network reach, services, and ownership. Now that we've explored the differences between NSDL and CDSL, let's summarize them. In our journey, we've discovered that NSDL and CDSL, while both pivotal players in the Indian securities depository landscape, each bear distinct characteristics and strengths. Starting with their inception, NSDL, as the first depository in India, has the advantage of experience and a long-standing reputation. On the other hand, CDSL, established later, has brought fresh perspectives and innovative approaches to the industry. Ownership and governance also set them apart. NSDL is largely owned by the National Stock Exchange, while CDSL is primarily owned by the Bombay Stock Exchange. This difference in ownership influences their strategic directions and affiliations. In terms of services, both depositories offer a similar range, including dematerialization, rematerialization, electronic settlement of trades, and more. However, NSDL has a broader service portfolio, including tax-saving bonds and commercial papers. CDSL, on the other hand, has a more focused service range, concentrating on core depository services. When we look at network and reach, NSDL, due to its longer existence, has a wider network of participants. However, CDSL has been rapidly expanding, reaching more and more investors across the country. As for market share, both depositories hold substantial portions of the market. Yet, NSDL, given its head start in the industry, holds a slightly larger share. CDSL, though, has been steadily gaining ground, reflecting its robust growth and strong market presence. In conclusion, while NSDL and CDSL share the common purpose of providing safe and efficient depository services, they differ in aspects such as establishment, ownership, services, network, and market share. These differences aren't about superiority, but rather about diversity in the Indian depository system. Understanding these differences can guide your decision when choosing a depository for your securities. Remember, the choice between NSDL and CDSL is not about picking the better one, but rather about finding the one that best suits your specific needs and preferences.